Hello, everybody. Welcome to the NC podcast. My name is Natasha Collins. I am the host of this podcast. I'm also the founder of NC Real Estate, which is my firm of surveyors, where I have a members club for landlords and property investors to come and build mixed use and commercial property portfolios. If you want to find out more, head on over to ncrealestate.co.uk. Okay, today, super excited. I have one of my favorite people to have a good conversation about all things finance, Steve Wallis. Hi, Steve.
Hi, Natasha. How's it going?
Good, thank you. Thank you so much for coming on my podcast today. I thought we would just take all of the conversations that we have usually when we're chatting and bring it onto the podcast so everybody else can hear what we chat about, because I think it's useful in this day and age of chaos. When I say chaos, it's not all chaos.
It's not entirely chaos. Depends what you're invested in.
That's true. That's true. So can we start by going through a background of you, what you do, where you come from, what you enjoy doing? Where's your speciality?
Football coaching. So the only thing I think I'm actually any good at is football coaching, not playing football. The whole, I know more than I can do myself. But the trickiest qualification I ever got was when I was 21 and I got my level 2 football coaching qualification from the FA. And there were 14 of us doing a sort of intensive week. I slept on my mate's floor in Nottingham, and I think there were about 6 professionals, and it was only me and the guy who used to play for Arsenal who passed it first time. And the guy who ran the course was like, so anyway, you passed. And I was like, all right, brilliant. He's like, no, there's only you and Craig. I was like, oh, right. He's like, yeah, so you need to go and get your UEFA B Part 2 in the next year, and you might actually have a career in this. I was like, I'm a broke student. I can't afford it. So didn't do anything with it. But I have coached in America. I've coached in Australia and all around the UK as well. So what I do like is football coaching, but I don't really like what's going on with the sport at the moment, but we won't get into that because I could go for hours. My background is actually financial services. So I'm a risk guy, I suppose, where I started out in Canary Wharf in London in 2005. For anyone who knows their history of the financial crisis, I was rating CDOs. So if anyone knows what that is, I had a front row seat for the financial crisis when I was about 24, 25. I've had to, explain myself to American lawyers since about whether I was doing the right things or not. And so I was the only person who left and didn't go to a bank to earn the big bucks. I was at the rating agency rating them where you didn't earn the big bucks. And I left because I didn't really like it that much. And that was July 2007, just before it all started going wrong. And I went and became more of a financial analyst, which is what I'd studied a bit at university and done a placement year in. And I just always liked numbers. Didn't do very well at A-level maths because it wasn't really numbers anymore. It was all physics and stuff like that. But numbers I've always loved, basically. And then when I got more into the risk side of numbers, I was like, oh, this is quite interesting, actually. There's all these people who are really good at sales. That's not really my thing. But I could just recover the company more money. So when I was in financial services, especially consumer lending or payments, we could do a better job of collecting money, which goes straight into the company as cash, goes straight to the bottom line as profit if you've already written it off. And I just really quite liked it. I worked with some people who are smarter than me, learned a lot from them. Yeah, and that's taken me all over the world, actually. I worked for a consumer lender out of Helsinki, and they were across 20 countries. So traveled everywhere, all over Europe, all over Scandinavia, Canada, even Australia. And I was actually chief risk officer of the bank in Malta for a couple of years as well. They burnt me out. I actually collapsed on a plane in 2017, quit the next day. And that's led me now to trying to work a bit less and not do all the crazy exec stuff, which is what burns you out. So I've done some non-exec gigs since then. So I've had one at a peer-to-peer lender in Leeds, but I've realized with non-exec gigs in financial services, they don't really pay you enough for the risk you take in, personal risk especially. So I left that as well. And then, and I'm also a shareholder and director of a property company around North Yorkshire as well. And alongside that, I do a bit of consultancy like we've been working on recently, and I invest as much as possible across various asset classes.
Amazing. you have had a varied career up until this point, and we've only known each other for the last couple of months. And every time we chat, I just love the stories, the information, the knowledge that you bring to it. And yes, Steve's also been working inside the members club on investor finance compliance, which is going incredibly well.
Yeah, thanks. I actually geekily, well, I've really enjoyed it for a start. I think, I've really enjoyed the interaction. It's been brilliant. It's always way more fun when people are engaged and asking questions. That side of it's been encouraging and, really, yeah, I've been really happy about that. But I've only ever worked on the side where you're having to adhere to the compliance. And I think that it's quite hard to get that knowledge and that information if somebody's been in it, and been in it actually, the FCA, the Maltese one as well. I've been grilled by all the auditors, and all that stuff, like when we've had to produce these regulatory documents. So having to, adhere to the regulations, there's quite a lot to it, but it's not that tricky. It's just, you just got to learn some of the really fundamental stuff and then just apply it in the right way, I think is what I've learned. And yeah, if I can pass on that information, I'm sort of, really happy to, because it only helps the industry, really.
Yeah, it's been phenomenal. Thank you so much for that. Should we start with, I think one of the big things that we talk about a lot is kind of where the industry goes wrong, because the reason I reached out to you is that I was seeing a lot of things that I just didn't think were quite right. And I'm not, I know my boundaries. I know that I'm definitely not anything to do with the FCA. It's kind of on the periphery, but as a firm of surveyors, we have to stay regulated. And so I came to you and I said, Steve, I don't get the feeling that there's a lot of compliance out there in the property investment industry. How do you see that? How do you see it when you're on social media? What are you seeing that you think, oh my gosh, this is a massive issue?
Yeah, and it's a tricky one, right? Because it's a grey area for SME property people, because the FCA, monitors regulated and, well, these appointed representatives in the financial services industry, of which you are not in the financial services industry. However, you're speaking to investors, and that the FCA do care about. So they care about, the individuals and the people who've built up a massive savings pot, and in their 70s, they chuck it all into one thing they don't know much about because they've been told they get 20% returns. That's what the FCA doesn't like. It doesn't like the fact that sometimes is highly unregulated. And some of it is totally fine to be unregulated. Crypto is largely still unregulated. There's other areas like physical assets is unregulated, like classic cars, art, wine, all that stuff. But they think that where there's a financial instrument or a quite obvious financial transaction taking place, they should be more either aware of it, or people should be doing their best to do the right thing. And I think that's where the SME property world can really, well, individual companies can elevate themselves by appearing as if they are regulated. That's the way I look at it. I was like, if you act like you are regulated, you will stand head and shoulders above other people. And especially if you want to speak to the people with the bigger pots, like the SaaS funds or family offices or people like that, they're going to want to see that you've got your risk disclaimers in place, that you're, that you're taking the right precautions with self-certifications, things like that. And I think that the whole industry will only ever benefit the more and more people are doing it, and the more that are seen to be doing it, as opposed to chucking something on LinkedIn or Facebook saying, I'll pay you super secured 10% returns a year, guaranteed. Always stick that guarantee bit in there. And that's just, it's just asking for trouble, because it's quite unlikely they're going to come after you. I keep forgetting how many firms the FCA oversee, but it's in the tens of thousands. So they're not really going to come and look for you, but don't give them a reason to as well.
And there's so many people who put this all over social media, just shamelessly post to people who they don't know who they're posting to or what the background is. Are you scared by that? Does that make you think like, oh my gosh?
Yeah, and it's, I mean, people listening to this will probably have heard of some of these phrases. I hope I'm not going too sort of over the top with it. But the FCA distinguishes between three different types of people, really: individuals, retail investors, which is most of the country, high net worth individuals, which is a small proportion, tend to be earning over 100,000 a year, or they've got more than $250,000 in assets, or a sophisticated investor, which is someone who who, spends a lot of time probably researching, analyzing, and dipping their toe into various things to see what they like. Do they like peer-to-peer? Do they like crypto? Do they like seeders and Crowdcube, all that sort of stuff? And they're probably doing that alongside investing in their ISA, paying into their pensions. So these people spend a lot of time, and the FCA, they think that the last two should be able to make up their own mind. They're either not going to lose their life savings, or they're going to be able to understand what they're looking at. But the retail investors, that's the bit they just want to protect those people, because that's the majority of the country, and they're the ones you see in the news where they've blown all their money on something, on one thing that they chucked all their savings into. And it's scary that people would do that. But yeah, it's also got to be on the company to have not spoken to them and been, like, sort out your moral compass, basically.
Yeah, so as property investors, if we're going out for investor finance, then it's our job to make sure that we're going out to high net worth and sophisticated investors, not just the average retail investor. And so in order to do that, we can't just post on social media, right?
Yeah, and there's some really good people in this industry, people who aren't, again, they're not really entirely regulated, but they're trying to bring the sort of level up as well. There's some things that I've attended recently where I've seen these posts put in a group. There'd be maybe 80 people who are actually property people or SaaS investors or something, and somebody will just post something in the chat, I've got this awesome opportunity, and details the whole thing about the opportunity, including all the returns, and says a few, there's no disclaimers in past performance is not a reliable indicator. Go speak to your independent financial advisor. None of those sort of disclaimers in there, which cover you a lot. And the guys who are running it just absolutely hammered them and told them, delete that right now. You don't know who's on this call. And that is it. You don't know who's there and who might act on something. And you may be really happy. Like, oh, brilliant. This is just another investor. Yeah, but there's plenty of investors out there, plenty of people who want to get their money out and lending to property projects with good security. You don't need to go and speak to the ones who've put in their last 20 grand into whatever you're doing.
No, and that's one of the big issues at the moment. This belief that there's no money out there to invest in your property. But are you seeing there's a huge amount of investment at the moment?
Yeah, there aren't enough opportunities for a lot of people. There's and there's also probably pent up demand from last year, especially private equity. I spend quite a bit of time in mergers and acquisitions, and this Q1 has been nuts. It's been absolutely bonkers for us, the amount of deal flow and opportunities, because hardly anything happened last year. People were not sure how their business was going to go. They didn't think it was a good time to sell because they were having to show, they weren't showing much revenue. They're showing the bounce back loans and the furlough and all that stuff. Whereas now with the vaccines, starting to turn the corner. And I think that, property investors, people will, for a good property project, you shouldn't find it that difficult finding people if you're reasonably well connected, and if you go about things in the right way. There is money that wants to go into your projects.
Mm-hmm. So what would you say is the right way of going about it and finding investors?
Yeah, so there's quite a lot to it. Obviously, we're discussing a lot of it on the masterclass. Yeah. I've broken those down into, there's the financial promotion rules. There's then the exemptions, which is how you make sure that you're just speaking to the relevant people. We're going to be talking about disclaimers this week, and then we're kind of all bringing it together. So there's those three areas really, and it's making sure your investor pack or whatever it is that you've got has all the right information in it. Is like the main thing in financial promotions is fair, clear, and not misleading. Those are things. Just always be thinking that. Also, don't fib about stuff. Like, if you've got a deal analyzer and you've put the numbers in correctly, we'll just show that. You don't need to show it's going to make someone 50% in a year. They might be more than happy with 8%. And so you don't need to over egg stuff really. If you've got a good property deal, it's not like it will sell itself, but certain people will be interested, especially if it's backed by security, which can't be found in a lot of other asset classes.
No, that's the thing. I mean, one thing we do see a lot of on social media is invest in this deal because you won't get by those kind of returns in the bank. What's your thought process on that?
Yeah, you have to be careful comparing apples with oranges or whatever. So comparing to a 0.01% bank return, yeah, I know, but you don't have financial services compensation scheme protection, do you, SME developer? Whereas that HSBC account or whatever does. So yeah, no, I think it's, you can compare to other things, but you then need to be fair, clear, and not misleading, and all that stuff about what the differences are. So if you're comparing to bank account, it's also liquid, right? Liquid meaning you can pull your money out when you want. A property deal, if you're putting your money in there for 12 months, you can't just ask for it back while the house is being refurbished, right? So it's just those sorts of things. I mean, that is always the classic, oh, you're getting nothing in the bank. Yeah, I know, but you can get the money whenever you want.
Yeah, it's yours to use.
Yeah. So I think but again, I just, I've been investing in peer-to-peer as well for about 3 or 4 years, and it's come a long way. But having said that, there's only a few firms in the UK that are actually fully regulated themselves. A lot of them lean on this appointed representative model. A lot of them go pop. The House Crowd just went bust the other week, which is one of the first ones. So yeah, it's the whole, investor beware or whatever. But I think that I just still think, actually, I think I'm bringing this up this week on the masterclass. I think bringing the personal touch back is actually a good thing. If you can actually see, hopefully soon we can all see each other a bit more frequently. If you can actually get an investor and bring them to your deal, show them what you're going to be doing, that's a bit different to stick it on this platform, turn on auto invest, and it's going to go out to so many projects or whatever. The funding circle model, that is more for SME investing. But yeah, I think that the opportunity to get money into good deals will always be there in this country, always.
Mm-hmm. Why are so many peer-to-peer lenders going bust or disappearing?
Yeah, that is the question, and this is obviously only my opinion, but having worked in a few, the costs of running the platform are really high that people don't realize. So compliance costs a lot, right? So you've got to pay staff for that. You've then got to have sort of capital adequacy and all this other sort of stuff. Keeping on top of the compliance costs a lot. The platform doesn't necessarily cost a lot. I think the platforms that do well, they have other income streams. So so I was at Source Capital last year, nice end-to-end model. So they have the franchise, and those franchisees source the opportunities. They then bring it to the platform where they get the borrowers. The platform's probably loss-making, but then they also can sell the end units as well to their database. So they have other income streams, which means the platform doesn't have to make much money. Whereas if they are purely just a peer-to-peer platform, the fees you earn are not that big, and you've got all these costs. Simple cash flow challenges.
Okay, and so if they're not monitoring that, so how would you know if you were investing in something and you thought that company was going to go under, or you're not going to know?
No. So the House Crowd, literally, I only found out through a mate of mine, because there was no announcement. The board of directors met, and the next day they'd gone pop, and the employees didn't know or anything like that. Apparently, this is only what I've heard. They apparently didn't know. And it was just, here's an email saying the board have voted to put the company into liquidation. Crazy. So there was no notice.
Wow.
But then a bit naughtily, it then came out, I think last week, that all of their development loans have been in default. So they'd all been late, and they've kept that quiet, which is naughty. So yeah, and this is the thing. I mean, but also people have to remember. So peer-to-peer is really new, and some companies are doing really well with it, and they'll continue to do really well. But it's when people go, oh, there's a new thing, I'm going to go launch a company, and they don't have much experience, especially in financial services. There's a real lack of financial services background with a lot of the platforms. So there's people who come in and think they can make a quick buck or build a company that's worth millions and sell it. And the reality is very, very different. So I just think it's one of the harder industries in fintech, especially to make money. And there's a lot of competition as well. There's so many platforms now. So it's just a tough niche, really.
And do you think part of that has been because of the pandemic and the changes that we're seeing because of it?
Yeah. I mean, I'm sure the House Crowd would say, that last year they just got hammered, by not being able to have people on site working, and then sales, people, not a lot of confidence for people to actually buy the finished units as well. even with the stamp duty sort of changes. So yeah, it's no real surprise that they've gone bust just after, the year we just had.
Mm-hmm. How are you seeing the market at the moment? I mean, I know this is a general question. We've had a lot of conversation about it. One of the big things is that I don't think anybody has really taken Brexit into account or even thinks about that at the moment. And I'd love to know your thoughts on it.
On the UK property market.
Yeah, and how how has it changed over the last 12 months, but also what impact has Brexit had on that from your point of view?
Yeah, Brexit's a funny one. So I don't mind saying. So I voted to remain at the time, mainly for giving the kids opportunities when they're older. I love Spain, I love Portugal. The fact that the kids could live in those countries when they're older was enough of a reason for me. I actually think that obviously, like with the vaccines, we've seen that Brexit in some ways has worked out quite well. Obviously, we've never been part of the Eurozone anyway, so we've been in control of our own currency. Maybe being in control of our own destiny is going to be a good thing as well. But I think that Brexit's impact on the property industry, I don't think there really is anything at the moment. It's more, the sort of response to the pandemic in terms of the money printing and what that might do to inflation. I think we just had our new energy bill come through, and one part of it, and most people won't even spot stuff like this. I was straight in with my calculator, saying to my wife, "You seen this thing? This like day rate's up 22.3%. Like that's actual inflation. It's not what you see in the thing that they report. It's no. What impacts you day to day? Your fuel, like petrol you put in your car, the electricity bill. For us, it was childcare as well. That rocketed in like 3-4 years. It was up like 25% in 3-4 years. So that stuff. So I think how that all impacts on the property market is property is a hard asset, right? And physical hard assets do well in inflationary environments. So business assets do well, precious metals do well, and things like property do well. So it could be that the property market will continue to do well, but at the same time, it's been propped up, really, because people have been given free money through furlough, so they can still pay their mortgage. So what happens if furlough ends? Is there going to be mass unemployment? And the stamp duty benefit stuff. So there's a lot of things which are meddling with the true economy at the moment, and we won't know how that plays out. And another one, again, for anyone who's old enough and remembers 2008-9, it all started actually in 2007. I was made redundant 2 years later. So there's always a lag, and I think that people forget that things don't happen really quickly. They tend to happen over a period of time. So it's kind of, I always think it's the same message as hopefully a lot of companies are doing. When times are good, you stockpile a bit of cash, because there will be corrections, there will be downturns. Make sure you can get through those, because if you can, you'll do very well in the next bit.
Yeah, that's a really good tip of advice. And I think that's what has really gone wrong, is that no one thought that a pandemic could be this disruptive. So a lot of businesses were doing business like they were 5-10 years ago, not thinking that right now they had to move on. There's a lot of money gone into online platforms and having to become online, which a lot of these big businesses were never thinking that they had to do. And so if you don't have the cash in the bank,
yeah, they've all been a bit drunk on the cheap money as well, so a lot of businesses have been fueled and have grown because they can borrow so cheaply. And yeah, that's okay, but you should also be stockpiling cash, really. Cash is the only thing that really matters. And when lending dries up like it did in 2009, that hasn't happened this time around because it hasn't been a banking crisis, but you never know when lending might dry up, although we did have it, didn't we? You might know this better than me, but the LTVs plummeted, didn't they? What lenders were actually going to lend, I think, one day 75%, the next 60. Stuff like that can happen. And I think, everyone always calls the pandemic a black swan event, but if anyone wants to go away and do a bit of research Akhil Patel and the 18-year economic cycle. I've been reading this stuff for a few years, and he called this, about 6-12 months before it happened. He's like, I don't know what it is, don't know what it'll be, don't know when exactly it'll come, but this happens throughout history. But people have short memories.
And that's a huge issue. I mean, things like the lending market at the moment is pretty difficult, especially because lenders' risk appetite seems to have changed a lot. I've noticed that the hoops to get lending are exceptionally difficult. If you've got any kind of mark on your credit score whatsoever, they're not going to lend to you.
I've got this ex-chief risk officer. I've got a risk qualification, but credit risk was my focus basically. So I've calculated the loss provisioning for a couple of companies, as in working out, how much we need to set aside for future losses. I've done all the analysis and collections reporting and everything like that. And what tends to happen is that, when the going is good, they want to lend more. They want to lend loads. And then as soon as they get a bit of an inkling that things might not be going so great, they're just going to close shop as much as they can, protect the loan book because they know they're going to have defaults. That is all cyclical. It just happens. It comes and goes. And that will forever happen as well. This is one thing we're going through at the moment, but there'll be other stuff every decade or so.
And do you think that by the end of this year, lending will get easier?
Yeah, good question. It's really hard to know. Like I say, I think the thing that everyone's forgetting is that furlough. I mean, I know a few people who've been on furlough for a year, and they haven't worked for a year, but they've been getting paid. Now, back in 2009, when the media company I was working for in London, when everything started tanking and companies stopped advertising because they didn't have a marketing budget anymore, they just halved our team and said, here's your redundancy payment, good luck. Right. So this is very different to that, where people's income is being supported. You could argue it's very hard to turn that tap off, and it may just continue. Universal credit, or what they're doing in the States, would just keep handing out new checks. But if at any point they did say that's it, furloughs over, I wonder how many companies would just do mass redundancies. And that's when things get really scary, because that when people are really struggling, you get all the knock-on effects of you get the societal impact, and that's worrying. So in terms of how lending might change by the end of this year, it all comes down to what sort of government support is going to remain in place, I think.
Do you think there needs to be government support in place, or do you reckon it just needs to be kind of like, let's rip the band-aid off, let's try?
I think as soon as they did QE and rescued the banks, there was no turning back. Because as soon as you've done it once, you're going to have to keep doing it. Which was it, the steel company at the moment, who are asking, government save us. Again, 30 years ago, there's no way they'd have just gone bust, or someone would have acquired them for peanuts, and it would have, all turned into a new cycle. Now they call them zombie companies, the ones that wouldn't otherwise still be going. And there's loads of them. There's absolutely loads of them. So it's very hard to stop this type of thing because of the knock-on effect. But what that means is inflation and stuff. So historically, it means inflation or stagflation or whatever it may be. So I worry about my kids and my kids' kids, because to pay off what they borrowed for the First World War took 100 years, and this has been bigger than that.
It's scary, isn't it? And then people complaining that there could be tax hikes, or we'll see it in other places.
Inflation is stealth tax. So things like in the budget, so no change to the thresholds for capital gains and personal allowance and all the other stuff for 5 years, right? So prices will go up in 5 years, but your what you're going to be taxed on, therefore, is going to be, you're going to get taxed on more, right? Because the thresholds are lower relatively. So that stuff is sneaky because no one really questions it at the time. Corporation tax jumping, I forget what the percent is. So when it jumps from 19 to, I think, is it 25? I forget now. That's not 6%, that's 30%, right? So 25 divided by 19 minus 1 is 30 or so. So it's actually, you'll be paying 30% more corporation tax on the same profit. And these are the bits that people don't realize. So they have to do something, right? They have to do something. or they could just keep printing money indefinitely, but that's, there tends to be a reckoning at some point throughout history. So they have to do something. Tax is the way to do it. Tax the wealthy, even if they're not, is the easiest way to do it when you're trying to get votes at the same time.
This is something that scares me actually about the housing market, because this current government have been all on first-time buyers, come and buy your property. Oh, hold up, our Help to Buy scheme didn't work because the developers didn't develop proper properties. But don't worry, we'll keep lending to you. New budget, we're taxing these people. But first-time buyers, here you go. Here's the guarantor scheme. And I wonder if this strange way of trying to raise tax here but give here is also not going to be very helpful. And the only reason that they're doing it is to get votes, and because they messed up so badly last year with how they handled the pandemic. I don't know. It's worrying. Do you worry about it?
Well, I read quite a lot about sort of government, sort of intervention generally. I think throughout history, it's never really worked. The free market tends to figure stuff out better than a state will. It's actually brilliant. Well, Dominic Frisby has written a couple of brilliant books. Life After the State is great. Daylight Robbery is probably even better. That's about taxation. Sounds dry, but he's a comedian, so it's pretty funny. But there is, there is that way of doing things, and then there is another way. The other way, of letting people figure it out tends to work better in the long run. But when there's, day-to-day issues, you can't really just do that, because as soon as you switch a tap off, you're going to create a problem somewhere. So it's tricky times for them. I wouldn't want to be in, that's for sure.
So you look at all different investment classes. What are you seeing right now across the board? Because I know, I talk predominantly about property. I don't know too much about other investment classes. How do you go about it? And, from a personal point of view, rather than giving general advice.
Yeah. So no guidance, no personal advice. Oh, sorry, guidance only, no personal advice. So actually, I was a proper lazy investor until about 4 years ago. It's when I collapsed on that plane, I suddenly realized I was like, I really need to think differently. If I'm going to collapse on a plane when I'm in an exec job, fly me here, there, and everywhere, and make me do 80 hours with young kids, and I don't really trust my pension to have enough in it, I need to start educating myself. So I always say it to my mates. I felt like I went back to university, and I just started reading like mad. So I invest across various things now. So I like SME business. I like investing into businesses. Property wise, we'll probably invest in overseas property. I'm part of an international community and I like traveling. So I like the idea of that, but we haven't pulled the trigger on anything yet. We almost have in Portugal and Panama, but we didn't complete on them. And then I like crypto. I've been investing in crypto since about 2017. I've upped my holdings in a couple of things recently. Precious metals, a few smarter people than me have been talking about physical assets again and inflation hedges, so gold and silver. But how I did it. So I suppose I don't watch too much TV. I don't go on all the social media very much. I probably read for about 4 or 5 hours a day, every day, relevant stuff. And it tends to be, I've sort of, I suppose, spent these 4 years finding the resources that I like and trust and think that they know what they're on about, and I just devour those. So I read a lot of books, but I also subscribe to stuff that's well worth my money.
And have you made mistakes along the way with your investment journey?
Yeah, loads. If somebody says they've never lost money on an investment, they're lying, or they're not taking enough risk, one or the other. So I tend to dip my toe. So dip my toe in something. Don't put too much of our overall net worth into one investment area, and then if it goes well, I'll increase my investment, but only when I find out if it goes well. The peer-to-peer stuff has taken some massive unraveling, and some of it still is unraveling. So that was a big mistake, was putting too much into the peer-to-peer. I tried to diversify by platforms in different parts of the country, different types of projects, but yeah, they've all been delayed, all of them, every single one. Yeah, but the crypto's done quite well. I'm quite happy. I've now got some silver bullion. And yeah, the international property is like the long term, along with SME investing. So getting minority or majority equity in multiple SMEs where I've actually got a bit of control over what's going on, not just, buying loads of shares of BP and hoping they go up. Yeah.
Where did you buy silver bullion?
The Royal Mint, just straight from the Royal Mint. Yeah.
And you're actually buying so that you can hold and it's in a safe somewhere?
You can, yeah. So you can buy it physically or they'll hold it for you in your name. You can buy as well overseas if you don't really trust the UK government not to seize it at some point, which has happened in history, by the way. They seized gold. So you can, if you find like Singapore, Panama, somewhere like that, where they're not going to just hand it over to the Brits if they say, give all this British people's money to us. So there's multiple ways of doing it. Yeah, and this maybe leads on a little bit to what I did a few years ago, which is tried to then teach people about all this through a little community of alternative investors called Guerrilla Investors. Just still going, but I've sort of been less active on it over the last sort of year or so because a friend and I have been pivoting and trying to make it broader. Like it used to just be alternative assets, and then we realized that actually that there's more you could teach people about becoming more independent. So yeah, we're now in the final stages of pivoting to this other service, which will take people from permanent employee to permanent investor. Yeah, which would be very cool. And it's the stuff me and him are really passionate about. Yeah, it's trying to educate people, or people who have that as an aspiration, but also just educate people, even if I call them zombies. So people who are salary only must be income exposed. So if you just rely on your salary, you're being really foolish. And you should just at least start to build up other investments. So you're not just relying on that one thing. If a redundancy comes or a pandemic comes again or anything, or something happens to you, make sure you got other income streams.
Where would you start with that? I mean, obviously, come to you because you're very, but where do you tell people to start?
Yeah.
Like, what's an easy place to start?
Unfortunately, the answer is there isn't. So there are so many rabbit holes. This is the thing. Anyone who's listening to this, who's been down the Facebook rabbit holes, or done a bit of trading, or whatever it is, or invested a little bit in crypto, whatever it is, you can spend so much time getting it wrong, and it will cost you time, money, energy, it'll stress you out, all the other things. So that's actually what we're looking to do with this. Is just we say we're not the gurus, we're the reporters. So we're going to go out, research it, and report back to you lot. So it'll be within a community. We're probably going to use Telegram or something where people can actually have a chat as well. And then we'll bring some off-market opportunities. EIS has massive tax benefits. It's really good over here. We might bring some EIS stuff to the group, but it's more just going to be people who are interested in this type of thing and want to know more, especially things like overseas visas. So you can get residency in quite a lot of countries without having to spend loads of money on their government bonds or whatever, but knowing where to look and knowing which lawyer to speak to, we already know. So we're then going to impart that knowledge.
Mm-hmm. And what's the benefit of being an overseas visa holder?
So if the UK locks you down for a year, you could go to Mexico, or you could go to somewhere else where they won't lock you down. It's things like, I mean, everyone will have a different opinion on the lockdown, so I don't want to get into that. But it's more things like, so my daughter really likes horse riding. She hasn't ridden a horse for a year because no one will. She can't go. The kids haven't been swimming for a year. Obviously, we ended up homeschooling for 6 out of the last 12 months. You never know when you might want a plan B.
Mm-hmm.
Yeah.
I understand that.
You might not want to use it. You might just want to know that you've got this second passport or a residency somewhere. But there's also, there's again, I'm not going to get into people's views on paying tax, but the non-habitual residency in Portugal, you can get 10 years tax benefits. Uruguay is the same. You can get 10 years as well. Yeah, and also just the world is great. I've traveled, I think, to over 40 countries, and there's ones I probably prefer more than the UK. And I'd quite like to know that I could go there and spend as long as I want, not just a couple of weeks on holiday.
Mm-hmm.
So like Mexico's a great one. So I only found out recently that most countries you get a 90-day tourist visa when you go. Mexico, you get 180 immediately. So you can go to Mexico for 6 months. Like, you don't even need a visa or anything. You can just go for 6 months. And there's a lot of nice parts of Mexico.
I agree with that. I agree.
But I think that's probably just my general view on everything, especially like I say, these last 4 years. Like when you collapse on a plane when you're 35 with 2 young kids at home, it brings things into perspective a bit. And I was just like, I think I need to think differently. I think that what I've been doing up to now, which is what a lot of other people have been doing, slogging it out, trying to climb the corporate ladder to earn more money to buy a bigger house, I was like, that just doesn't seem like a very good idea. So I just started thinking differently, and now we've like hammered down our outgoings. Our outgoings are so low, especially for a family of 4. And I've come with the opinion that having low outgoings is probably the best way to get freedom, because you can take more, you can take a few risks because, you know, paying your bills isn't costing a lot. You can, you know, especially some of the higher risk stuff, which has the higher return, you can get a bit more involved in that because you've only got, like for us, £2,500 a month. That's all we need a month to pay everything, absolutely everything. People down in London, 7.5 if they got a beastly mortgage. You know, in my mind, that's just utterly bonkers. Get your outgoings down, start investing, and think about what you actually want to achieve over the next 10, 20, 30 years.
That is the best advice you can give. I'm fully on board with that. That's exactly what I do. If I didn't have the money to prop everything else up, I'd be terrified. I've been in that position too much where you start losing things and you're like, I don't know how this is going to work. So I completely agree with you. Steve, this has been an absolute pleasure. I'm going to put all of the links where you can find Steve below in the show notes. You can also come and find him in my members club as well. There's plenty of goodness, really great information over there. Steve, it's been a pleasure. Thank you so much for coming.
Yeah, thanks a lot. No, it's been great. Thanks.
But thank you to everybody who's listened today. If you've liked this podcast, don't forget to rate and review because that helps more people find this podcast. Thank you for listening to me today. Thank you to Steve for coming over. I can't wait to catch up with you all again soon.